Coyn Vice President at BTC Inc. We own Bitcoin Magazine, among a lot of other properties in the space. Today, our topic is institutionalized cryptocurrencies in the wholesale market. We have some of the most knowledgeable people on stage on all of the institutional capital about to hit the market. We'll start off letting them give a quick intro of themselves, and then I'll give an overview of our topics, and then we'll dive in. Zane, you want to start?
Sure. My name is Zane Tackett. I'm the head of OTC sales at B2C2. I've been in crypto for about 6 years. I started at Coyn, worked at Bitfinex for 2 years, and then joined my largest client, B2C2, to head up the OTC desk. We're a liquidity provider. We do that through market making directly on the exchanges, and then also through OTC. And our focus within OTC is on the electronic offering.
Hi, my name is Joonkee. I'm Asia head of Cumberland, which is a part of DRW. DRW has been around for 27 years. It's a principal trading house based in Chicago. As you can see from my dress, I come from a very traditional financial background. I have spent about 30 years in investment banking career. I joined Cumberland to essentially fill the gap between the traditional finance world and crypto asset world, where my own particular experience and my career build-up was in derivatives to OTC trading, which we think we can add value to crypto OTC trading. So, glad to be here. Thank you.
Hi, my name's SJ. I am a trader at OSL, formerly known as Octagon. We reverse IPO'd on the Hong Kong main board last year. Got PwC to audit us. I think it's the first time one of the big four auditors actually took on a pure crypto company as a client. Insurance fully covered, both hot and cold. We've been around for 3 years. Started out being bootstrapped onto the first exchange in Hong Kong called ANX Pro. And since the reverse IPO, we've essentially become OSL. I'm one of the 6 traders there. We try to essentially get the institutions on board and see how it goes there.
Hi, my name is Josh. I used to be a lawyer and a VC. I'm one of the partners at KCB Capital, which is an OTC desk based in Singapore. We market make for spot, and we're trying to pioneer the crypto option space, and very happy to be here.
Great, so we're going to break down the panel into 3 topics. The first is an overview of the OTC market. The second, solutions and developments going on affecting the market. The third is the impact and timing of institutions coming into the market. So starting with the overview, I want you guys to describe what is OTC, in particular focus on the market size. A lot of people don't know how much OTC trades actually impact them. They only see the retail sides of the trade. So.
Sure, I'll kick things off. One thing that we were discussing is that there's a lot of misinformation or misunderstandings of the OTC market. A lot of people in the run-up in 2017 were saying like it's multiples of the exchange volumes, and I think that's just simply not true. Also, a lot of the OTC trading, the flow ends up going to the exchanges anyways by the market makers hedging. And you see people talking about, oh yeah, if you do 100 million through OTC, it won't even move the market. And that's not really how OTC works. There's still market impact. Obviously, we try to minimize it, but the OTC does still require the exchanges to move out of risk. And so a lot of the flow that goes through OTC ends up hitting the exchanges anyways.
If that's the current status, the reason why we are interested in institutions to come in is once the institutions come in, the volume difference will be like huge, right? So I'm familiar with, for example, foreign exchange and financial derivatives market, which is essentially OTC market. There's no exchange market in this kind of products. I can easily see in the future when institutions come in, the OTC market will be, as you initially mentioned about the rumor before, like 4 or 5 times, but yeah. even north of that. So that's the main reason why we are currently waiting for institutions to join the market.
And it's on the agenda to discuss today, derivatives and other products coming into the space. But it has to be established that the most commonly traded tokens, Bitcoin, Ether, stable coins, they're not naturally yielding assets, and there's no avenue really for leverage in this space. So there's a lot of missing capital market instruments that haven't been built yet. And so there's no incentive for people to build a balance sheet, which is necessary for the space to grow. So even if OTCs like us are sitting around waiting in the wings for institutions to bring their money in many cases there isn't much incentive simply because the yield isn't there for them.
Yeah, and I think also the whole genesis of OTC was, if you think back a couple years back, I mean, there was really no venue where somebody with a decent lick of cash could pretty much buy whatever notional value they wanted to on the exchanges. I can't imagine the likes of Oxif, Citadel, or any of these established hedge funds or any other asset manager willing to put up a selfie with their passport or whatever and onboard KYC just to find out that the liquidity there isn't there. So the whole genesis of Octagon was essentially to provide a venue where guys with institutional demand would be able to acquire or sell the desired crypto without market slippage. Markets are getting more efficient. We're starting to see derivatives as will be a later part of the product, but it's come to a point where like everybody wants to have an OTC desk. All the exchanges, it's a natural transition, and it's just, I think, like as Zane pointed out, people think there's a massive pie there. I don't really think it's nearly as big as what the media points it out to be.
I think a lot of that mystique comes from how opaque the market is, which is the purpose of an OTC desk. But in reality, if you look at the flows right now, the retail market's dried up, the rivers run dry. You've got a $170 billion space with some massive market makers all scalping away for profits at the end of the day. The spreads have compressed. It's harder to make money. We've seen some desks go out of business along the way. Won't name names or anything, but it's definitely changed, and really, really fast. So there's been a regime change. I think it's mostly adults sitting at the table these days, and that's a good thing as well, right? We're coming to a point where converging on decisions, trying to standardize the processes as we go. But it's good. I think we're in a good place now, actually.
Yeah. It's one of the, people talk about institutions coming in. One thing that's kind of interesting is you have already seen some of the bigger trading desks get involved in crypto. You haven't really seen the asset managers, but because of the volatility and the action going on in crypto over the last couple of years, some of the biggest HFT and trading firms have moved into crypto and kind of started pricing out a lot of the less professional shops, and started there are a lot of shops that had to close down and wind down because of it.
Yeah. At the same time, I've seen a couple of firms go full cycle into the market and out. So traditional shops from Chicago, HFTs, realizing they made, oh great, $10 this year, fantastic, 2017, 2018, and then realizing in the 24/7 market, the amount of risk reward to how much they made, which they could have done in traditional markets, wasn't worth it, and they've gone back out. And I've seen 2 firms do that so far. So
Yeah.
If I go back a little bit before, the crypto ecosystem people may not be aware of the role of the OTC because the market started with exchanges, right? But it's a very well-known concept in the financial market, but however, it's not really well understood in the crypto space. But I guess for the individuals to come into the market, you don't really need OTC critically. But you can imagine institutions with fiduciary duty, when they try to come into the market and buy crypto assets, they have to know that there's a certainty of a pricing, the certainty of amount, certainty of a transaction. They have to have all these things lined up. They cannot just put the money into exchange and hope that the transaction will be done at a certain price, which they cannot really know beforehand. So all these things are guaranteed by OTC traders, right? So a company like us, I'm sure others as well, as a principal trader, we are market maker. So when our counterparts, like institution, call us and say, we need, let's say, like 1,000 Bitcoins, we can give them spread, a bit of a spread, and transaction can be done instantaneously. Yep. There's a certainty of pricing, there's a certainty of transaction. So that's the role of the OTC compared to exchanges.
So we talked some about some of the challenges of bringing institutions into the market that we're facing. Let's talk about some of the developments that we're seeing in the market today that are good things going on. Maybe start with lending. talk a little bit about why lending matters, where we're at in the process of the development of the lending market coming into OTC.
Okay.
Go
Go ahead, man.
I was just gonna say that a few years ago, pretty much the only way you had to access borrowing is on the exchanges. Like Bitfinex, Polo had peer-to-peer lending. Those rates would go from like 0.05% a day up to 0.75%, like that. There's very little liquidity and very little certainty. And so it'd be a lot harder to kind of, if you're an institution, to come in and be able to borrow a large amount of funds at a reasonable rate for an extended period of time. But we start to see a lot of the OTC desks get more and more involved in lending, and that allows these institutions to come in and get active in the crypto space without having to go long first. And that's kind of a fundamental need for institutions to get involved. And so, I'd say we're still in the early days of lending, of the lending facilities, but it is something that a lot of OTC desks have started putting more and more focus on or more and more energy into.
I mean, it'll just make the market more efficient. I mean, at this point, there's not really an efficient way to express a short, or you can't really have a position when markets are range bound. But I think options will obviously cater to that. And if you can essentially borrow coins, you can short the market. For example, if these lending facilities that we're seeing pop up now were around back at the end of 2017, I really doubt that we would have seen a peak of 20,000. There would have definitely been short sellers coming in to check the market on the upside. That wasn't there, so the fact that we're seeing more advanced products enter the scene is obviously more tools for the professional management when they eventually come through. And the spreads have clearly expressed that. I mean, if you look across the tier 1 exchanges, the spreads between the actual coins has compressed to less than 30 bips. That's pretty efficient. It'll probably compress even more as we see more of these products come through and the users expand as well.
So is lending out there for all tokens, top 20, top 10, just Bitcoin?
I've seen top 20 so far.
Okay.
I've seen a few brokers make bespoke deals, but most of the volume's in top 10.
The difference would be the liquidity.
Yeah.
So, I mean, everybody can borrow and lend coins, and especially among individuals, they themselves can lend and borrow money. But the question is, for institutions to come in, you need a liquid lending borrowing. To have a liquid lending and borrowing facility, you need to have a liquid market. Right? So naturally, top few coins with liquidity is naturally the target for initial lending and borrowing market, and that market will be the benchmark for other coins to follow.
Yeah, let's not forget, most of the platforms that are offering this out there right now, the rates are bullshit. Like, it's terrible. You have to over collateralize. Like, what's the point of even doing it in the first place? Strangely enough, I mean, a few of the desks, I know this for the other guys as well, we borrow uncollateralized, and there are a few close partnerships we're able to do this with. But it's the very nature of crypto and the way that it's done P2P that's very, very difficult to explain. And then with the larger lenders, you have the problem of rehypothecation, which is when let's say you lend them their coin, then they take it to lend it out, and it keeps going and going and going. And eventually, you don't really know where and how many layers have happened. There's too much credit risk. But going back to the original point, right? This is about institutions, why they're coming in. All major capital market institutions use leverage to earn alpha. That is just the way they look at the market in order to enter it. And if we don't have these things in place, they simply won't bring their capital or balance sheet into the space. That's why.
One importance of institutions to come in is, for example, in the financial market, I mean, as I said, I'm from investment banking. Investment banking is all institutional market. There's no real retail market. So institutional market gives you a professionalism into the system, because as an asset manager, they have a fiduciary duty to their investors. They cannot say, I like to speculate on Bitcoin and I made money, but then I lost money. So and they cannot say like that, like a retail people. Retail people can speculate. If they lose money, they just lose their money. Hopefully the discretionary money, not the money they need for their living. But institutional asset managers cannot do that. So they have a fiduciary duty. So they have to make sure there's a proper risk management. there's a proper transaction regulatory framework. They have to go through all these things. So almost by definition, when institutions join the market, that's when there's a professionalism in the market. Right? That's why it's so important.
Interesting. Maybe move on to derivatives, helping institutions hedge their risk, obviously. The majority of tokens out there, to my understanding, outside of Bitcoin, don't have the ability to short or do a put option on that asset. So are derivatives, we've talked about that there are a lot of companies entering the market that are offering option sort of contracts. Are these coming to Bitcoin, to other tokens? And how could that impact those as they come online?
Well, I think just to put that in context, the crypto market's obsessed with ETFs. The idea that you can lock all this crypto up in these ETFs. But you take a step back and look at how normal capital markets work. When an ETF or an index is launched, they don't go out and buy exact amounts of the underlying. They will use futures, they'll use options in order to express the investment itself. So that's the reason why this is important. If we are to have institutions come in and bring their capital in, you need options, you need less counterparty risk on futures. So we've been market making options OTC, that's bilateral. People come to us, we make a market for them, they sign an ISDA with us, and they post collateral directly with us. But that's not ideal. There's a couple of listed markets, so if you're familiar with Deribit and LedgerX, but again, those are physically settled, and it's like trading Apple stock and earning back Apple stock. They're not ideal places to trade either. But they're a good start, and even now we're seeing them sort of creep up in the rankings, and a lot more volumes going to them, especially in highly volatile markets like now. So the natural use case and demand, which Zane's been seeing as well, is miners coming in needing to protect their working capital and operations, projects and ICOs needing to protect their treasuries and think about the next 5-10 years down the line. And even then, for certain projects that are trying to create an entire new token economy, they need to build out a derivatives market for that to be stable. Yeah.
And one of the issues that we've seen in the exchanges that have popped up with derivatives is that you have socialized losses or deleveraging or other manners to deal with the unfilled liquidation orders. And so it's really hard for an institution to come in, take a position, and then when it comes time to settlement, they're like, oh yeah, by the way, socialized loss, you lost 10%. That's not going to fly. And so a lot of the existing derivatives, they're not well suited for the institutional crowd. So I think a lot of the OTC desks are starting to try to build products that are, have more certainty around them. And I think that would it provides a lot more confidence to the institutions. There's a lot less uncertainty around what's going to happen with an unfilled liquidation order. And so we built out a CFD, CFDs, and that's probably, we've received a lot of interest there from the institutions and, miners hedging and things like that. So I think we'll continue to see more and more derivatives be built out by the OTC desks themselves, and I think they'll be utilized by a lot of the institutions.
Yeah, you can see where the crypto finance is going by actually seeing the history of how financial market moved, right? Why is the derivatives initially invented in the first place in the financial market? That's to facilitate risk management. And then at the same time, since you can do risk management efficiently, that also means you can actually speculate efficiently as well. So you'll have derivatives in asset management type fashion, as well as derivatives in liability management type fashion as well. So when institutions come in, as I said, since they have a fiduciary duty as a professional manager, they have to have a risk management tool. And the risk management tool they need is, for example, futures, options, swaps, and all these things are the tools they need to professionally manage their crypto asset when they come in. So naturally, these things will evolve. And then there's a lot of effort going on in every one of our shops to develop this kind of product, and it'll be converged into future market where we'll facilitate institutions to come into the crypto market.
And one thing that I've seen is, more and more institutions get in. Like I've been in the space since 2013. We've seen a number of options platforms pop up, but I've never really seen any consistent demand for options, just because I think that the players in crypto at that time weren't that sophisticated, and just the futures that were out there worked. But over the last 6 months, I'd say, this is by far the most consistent, regular demand I've ever seen for options. We get hit up quite a bit asking if we're going to start pricing options. And the more sophisticated traders that I've seen, they're all trying to force the option. So I think we'll definitely see more interest there as time goes on.
I just think it just provides, like, not to beat a dead horse, just more ways to express a position. You can be more tactical, and at the same time, most of the leveraged derivative products, like by definition, they're leveraged products. You don't really need to commit 100% of the capital to express that amount in the terms of notional value. So if you're taking a positive long-term view, but for example, there's a fork coming around, or there's like a protocol upgrade, and you think there will be some midterm volatility and some downside, you can use options to protect that downside while still maintaining a long position. And that you can't really do that. It makes no point if you have to commit 100% of the capital to express that position. That's why, by definition, derivatives are leveraged products. The reason CME and SIBO didn't really take off, I believe, is because the commitment they require just doesn't make any sense. But like Zane pointed out, that there are proper platforms that are actually garnering pretty decent traffic these days.
In Korea, a little bit of a sideline maybe, but in Korea, futures on crypto are currently illegal. So because exactly because it's an efficient tool to express your view. So it could be expressed as a leveraged way of speculation in the markets. So current regulators in Korea are concerned about speculation, of course. That's why currently futures on crypto, for example, on Chicago Exchange is currently illegal, which is unfortunate because, as we said, these kind of tools are what we need to develop the market more professionally so that institutions can come in.
Are there other examples worldwide where derivatives are illegal, or just Korea that you guys can think of?
America, CFDs are illegal.
Okay.
Yeah, but then there's similar products that you can trade, but yeah.
And Zane, who's the demand currently coming from today?
I think it really there's a wide range, but a lot of some of our institutional clients that have already gotten in that we've seen are FX brokerages. They already have the retail client base onboarded on their platform, trading FX and basically spread betting, and so adding crypto is a pretty easy move for them. And so we've seen a lot of interest from traditional FX brokerages that add crypto as a tradable asset on their platform, and then need somewhere to hedge it. And so that's where we've seen a lot of the interest from institutional players. And I think what we're all kind of waiting for is more of the asset managers to get involved. That's when the big money starts to move in, and not just people taking small speculative bets on spread betting platforms. But yeah, so when the asset managers get involved, I think that's where we'll start to see more fireworks.
Got it. Let's talk a little bit about stable coins. 2018 into 2019 has been talked about the year of the stable coin. I think we're up to $3 billion in value in that asset class alone, and growing every day. Has that helped access for people around the world, and what impact have you guys seen? And where do you see that market moving and helping OTC desks?
Yeah, for us, it's a very natural use case. So my firm's based out of Singapore, and we face a lot of local currency markets in Southeast Asia, where you have dislocated FX, a lot of capital controls. You have a lot of people struggling to move money in and out of the country, even for legitimate reasons. So stablecoins present a pretty unique way for them to do this. And if you compare us to, let's say, a European or an American desk where it might be 70% Bitcoin Ether dominated, we're the exact opposite. We're 70% stablecoin dominated. And it is really just cross-border capital flows across Southeast Asia. So in markets where, for example, we do rupiah in Indonesia, They love USDT. If you do it in Korea, they've begun to really take a turn for TUSD. No exact reasons why, like there's one preference over another. It's essentially an identical product, one regulated, one not. Using USDC, gain adoption across Southeast Asia as well. Various countries seem to have their own flavor. And we're definitely seeing it become mainstream. I just came back from Token 2049 in Hong Kong. You go to Tsim Sha Tsui on the Kowloon side, it's there on the board on these like money changers. It's there at retail at the street. You can buy it with cash. That's about as retail penetrated as you can get.
And also, I think it provides a venue to escape the volatility. So previously, when somebody, for example, held some Bitcoin and they expected to see some volatility or expected like a downside in the markets, the only way out was to basically exit through fiat. Now they can park their cash in stable coins, and the reason that makes it a little bit more smoother is because the fiat on-ramps are not exactly open to everybody. Like if the SWIFT system on any bank finds out that you're on crypto, in Asia at least, chances are they'll shut your account down. Now they don't have to do that. They can just exit their positions and just sort of park on the sidelines with these stable coins as well. So I think that's another particularly informative use case.
Yeah, there's an immediate usage of stablecoin for OTC trading because, for example, we provide 24-hour, 7-day trading. However, even though you can do that with the cryptos, you cannot do that with most of the fiat currencies, right? Most of the fiat currencies, they actually do not operate during the weekends. So for us to manage the liquidity of crypto versus fiat, in US, for example, using US dollar stablecoin is very important in this sense.
And you always end up coming to these conferences and people are complaining, oh, there's no use case, no one's figured out what to do with this. And there's always this imagination that crypto will replace fiat. I think stablecoins are a very logical expression that it's going to be the other way around, and that's our view as well. It's fiat becoming more like crypto, and that's exactly what we see in Asia with the money mobility. It is essentially a shadow banking layer. People who will never have to touch banks again and simply rely on stablecoins for stored value.
I'd say one of the big benefits for stablecoins, for OTC desks and other venues, is that it gives market access to people in places that otherwise would not have it, and it gives them access to a much deeper liquidity pool. So if I'm trading BTC USDT, I have access to a much more liquid trading pair than if I'm trading BTC Thai baht or BTC Vietnamese dong. And so you get some of these trading firms or traders, and they gain access to the most liquid trading pairs through stablecoins, and it's good for us as an OTC desk because we can't trade dong, we can't get dong out of the country or anything like that. So that pretty much means that we can't trade with people in that market. However, with stablecoins, it's quite easy for them to find an on-ramp domestically, and then now they can trade with anybody pretty much anywhere because most people are going to accept USDT. So it gives us access to people that we wouldn't otherwise have access to, and it benefits the traders as it gives them access to a much more liquid market than they would otherwise have locally.
For sure. Let's close out the panel talking about the impact. So I've been hearing for a long time that there's this big pile of money on the sidelines just waiting to enter the market. How much capital do you guys think is on the sidelines today? And what could the potential impact when it does come be to the market in general?
Yeah, I can start with the traditional financial market situation. Currently, global size of the asset management pool is about $80 trillion. So how much of that is interested in crypto, we cannot really say. But let's say what these people are looking for is a new asset class where they can expand into, preferably those new assets which do not have correlation with the current financial market. And crypto asset is actually a very good candidate. Let's say even only like 1% of current asset management pool, they invest into crypto world. So 1% of $80 trillion would be $800 billion. Compared to $175 billion of current total market valuation of all the cryptos combined. So suddenly, even if you just add cash to cash, new $800 billion added to $175 billion, your market valuation of the crypto world will increase from $175 billion to $975 billion, just from that 1% allocation coming in. So you can imagine the impact on the pricing would be similar scale of multitude. So the potential for price impact would be huge if institutions come in. So that's why we are all waiting for institutions to come in for market professionalism as well as impact on the market.
I think it's an often repeated example. Maybe it's already been labored to death, but assuming that crypto is digital gold, like you take that example and you see physical gold markets at about 7 trillion and gold futures, gold derivatives at 35 trillion. I talk to kids these days, 8 years old, they know more about crypto than most people, and by the time they come to maturity, that'll be their stored value. So it's a very pithy example, but you can take that as a proxy for where we think this will get to eventually.
If you took $1 billion today and put it into Bitcoin, how much would it affect the price?
All matters on how you do it, right? Like, are you just gonna go market long on BitMEX 100x or something, or it depends, are you gonna break it up across venues? Are you gonna do, like a TWAP? I think it'd push the price up a good bit, obviously. But
spread
I
the
think
market
it's also
at 250 on each.
I think it's also a little bit of a fallacy that there's like this huge amount of money, and then all of a sudden it's gonna be bam, and it's in the market. I think it's more like a slow bleed. We start to see a lot of interest from family offices, and so you'll start to get like a little dribble from, or a little, people slowly starting to move in, and over time it'll just increase the size of the pie. But it's not going to be like we wake up one day and it's like, oh, bam, I guess institutions are in now, everything's in, and the market's rallying. It'll just be a slow bleed into it as as the market grows and matures.
So I heard a rumor that our Deconomy Bitcoin run that happened 2 days ago, I heard a rumor that it was one person that just hit a buy order on the market. True or false?
Well, I mean, if you look at the exchanges they hit, I won't name them, but the 3 exchanges are essentially the constituents of what comprise the BitMEX index. I don't think it was a coincidence that they chose these venues, knowing that in times of high traffic, there are occasionally times when you can't really execute at the price you want, and you're forced to do it $10 higher, or you're actually liquidated out. I mean, it could be the case where somebody already amassed a significant position during this Goldilocks market for the past 3 months and just wanted to see their portfolio moon. But I mean, at the end of the day, like for the instos to come through, I don't really think it will be a slow bleed. It'll be one big case, and frankly, at this point, I think the risk of not doing anything is much higher than getting involved. So, perfect example is the Ivy League endowments. Like you saw one guy jump in, and basically, I think it's 15 of the top 20 endowments are all involved. These endowments don't really compete with the performance of hedge funds or national pensions or whatever. That's their niche. So if we see a use case for a success case in one of the hedge funds or one of these mutual funds or asset managers, I think it'll just be like a stampede to the gates.
So is that a true?
Say what?
Was that a true on the one individual or a false?
Who knows, man?
I'll confirm there's a few strong hands out there who are cornering the market.
Yeah.
And anyone on this panel will tell you it's been a bloodbath on our desk for the last 48 hours. So
So another rumor that I've heard recently is that there's capital out there with a set price floor waiting for Bitcoin to hit that level to hit the buy button.
Is
you guys
this
feel like
an
that's
OTC deal? I got 1 million Bitcoin to sell.
I think humans have a natural, we like nice round numbers, and so like you'd see a lot of stop hunting that'll go right towards that nice round number. So I'm sure that there are strong price levels that people are willing to go in, but I don't think it's going to be like if we see 3,000, then it's instantly going to jump up to 10,000 because everybody's pouring in.
But that kind of level would be also important because it's not just the amount of money which came into the ecosystem to increase the price, but in what situation the money came in. For example, in this time, what I heard was there was a lot of short position, and they were pressuring the price a lot. And once that kind of price was slightly going up to hit that and pass through that short position, there was a lot of squeeze on the short, and that actually triggered price to jump as well. So that's an example of maybe same amount, but in different situation, the price movement would be quite different.
Well, the rumor was that 100 million went in, and that's what caused the rally. But 500 million was liquidated on BitMEX. 500 million in shorts. So it had a pretty big impact.
Great. Well, we're all thankful for it. So. All right. Well, that's our time. So we're up. Thank you, everybody. Appreciate it. Thanks, guys.